Credit is the ability to borrow money and repay it later. It's a fundamental aspect of modern financial systems, allowing individuals to make significant purchases or investments without needing the full amount up front. Whether it's buying a home, a car, or even funding education, credit plays a crucial role in enabling these transactions. It's like a financial report card. Just as students receive grades that reflect their academic performance, your credit report reflects your financial behavior. It includes details about your borrowing history, repayment patterns, and any outstanding debts. This report is meticulously maintained by credit bureaus and is used by lenders to assess your financial responsibility. It tells lenders how trustworthy you are with money. When you apply for a loan or a credit card, lenders review your credit report to determine the risk of lending to you. A positive credit history indicates that you are likely to repay your debts on time, making you a lower-risk borrower. Your credit score is a number that represents your credit worthiness. This three-digit number is derived from the information in your credit report and is used by lenders to make quick decisions about your credit applications. Scores typically range from 300 to 850, with higher scores indicating better credit worthiness. A higher score means you're more likely to repay a loan. This can lead to more favorable terms, such as lower interest rates and higher credit limits. Essentially, a good credit score can save you money and provide more financial opportunities. Credit matters because it affects almost every aspect of your financial life. From the interest rates you pay on loans to your ability to rent an apartment, your credit score plays a pivotal role. It can even impact your job prospects, as some employers review credit reports as part of their hiring process. Good credit can help you get lower interest rates on loans. This means you'll pay less over the life of the loan, whether it's a mortgage, an auto loan, or a personal loan. Lower interest rates can significantly reduce your monthly payments, making it easier to manage your finances. This includes mortgages, auto loans, and credit cards. With good credit, you have access to better financial products and services, which can help you achieve your financial goals more efficiently. Whether you're buying a home, financing a car, or obtaining a credit card with rewards, good credit is essential. It can also make it easier to rent an apartment. Landlords often check credit reports to ensure that potential tenants are financially responsible. A good credit score can give you an edge in competitive rental markets, making it easier to secure the apartment you want. A good credit score opens doors. It provides you with more options and opportunities, allowing you to make significant life decisions with confidence. Whether it's buying a home, starting a business, or planning for retirement, good credit is a valuable asset. A bad credit score can slam them shut. It's that important. Poor credit can limit your financial options, making it difficult to obtain loans, credit cards, or even rent an apartment. It can also result in higher interest rates and less favorable terms, costing you more money in the long run. Start building your credit today. Establishing and maintaining good credit takes time and effort, but the benefits are well worth it. Begin by paying your bills on time, keeping your credit card balances low, and monitoring your credit report regularly. Your financial future depends on it. By taking proactive steps to build and maintain good credit, you can secure a brighter financial future for yourself and your family. Remember, good credit is not just about borrowing money, it's about creating opportunities and achieving your financial dreams. A strong credit score is a financial superpower. It unlocks better interest rates. This means you pay less for borrowing money. Imagine buying your dream home. With good credit, you'll get a lower mortgage rate. This could save you thousands of dollars. Need a new car? A strong credit score gets you a lower auto loan rate. This keeps your monthly payments manageable. Good credit doesn't just save you money, it also opens doors to better financial products. You'll have more credit card options with better rewards. Building credit from scratch can feel overwhelming, but it's easier than you think. Start with a secured credit card. A secured card requires a security deposit. This deposit becomes your credit limit. It's a great way to show lenders you're responsible. Use your secured card for small purchases. Pay the balance in full and on time every month. This builds positive credit history. Over time, your credit limit may increase. You might even qualify for an unsecured card. Building credit takes time and patience, but the rewards are worth it. Becoming an authorized user is another way to build credit. Ask a trusted friend or family member to add you to their credit card account. As an authorized user, their credit history becomes part of yours. This can give your score a boost. But be sure the primary cardholder has good credit habits. Being an authorized user is a privilege, not a right. Use the card responsibly. Don't overspend. Make payments on time. It's important to communicate with the primary cardholder. Stay informed about the account balance and payment due dates. Section 5. Building credit from scratch. Responsible habits. Building credit isn't just about opening accounts, it's about developing responsible habits. Pay all your bills on time. This includes rent, utilities, and even your cell phone bill. Late payments can damage your credit score. Set up payment reminders or automate payments to avoid missing due dates. Create a budget and stick to it. This helps you manage your money wisely and avoid overspending. Living within your means is crucial for good credit. Remember, building credit takes time. Be patient and consistent with your efforts. You'll see results eventually. Section 6. Using credit wisely. Credit utilization ratio. Understanding how to use credit wisely is crucial for maintaining a healthy financial life. One of the most important aspects of this is managing your credit utilization ratio effectively. Using credit wisely is just as important as building it. It's not just about having access to credit, but about how you use it. Proper management can lead to better financial opportunities and lower interest rates. One key factor is your credit utilization ratio. This ratio plays a significant role in determining your credit score, which lenders use to assess your creditworthiness. This is the amount of credit you use compared to your total available credit. For instance, if you have a credit limit of $10,000 and you use $3,000, your credit utilization ratio is 30%. A high credit utilization ratio can hurt your score. When you use too much of your available credit, it signals to lenders that you might be overextended and at risk of defaulting on your payments. It suggests you're relying too heavily on credit. This can be a red flag for lenders, indicating that you might not be managing your finances well. Aim for a ratio below 30%. Keeping your credit utilization low shows that you are using credit responsibly and not overextending yourself. For example, if your credit limit is $10,000, keep your balance below $3,000. This helps maintain a healthy credit score and makes you more attractive to lenders. Paying down your balances is a great way to improve your credit utilization. Regularly paying off your credit card balances can help keep your utilization ratio low. Don't max out your credit cards. Maxing out your cards can lead to high interest charges and make it difficult to pay off your balances. It's a fast track to credit card debt and a lower credit score. By keeping your credit utilization ratio in check, you can avoid the pitfalls of high debt and maintain a strong credit profile. Section 7. Using credit wisely. Monitoring your credit reports. Monitoring your credit reports is essential. It helps you catch errors and prevent identity theft. You're entitled to a free credit report from each of the 3 major credit bureaus annually. Request your reports from Equifax, Experian, and TransUnion. Review them carefully for any inaccuracies. Look for accounts you don't recognize, incorrect balances, or late payments you didn't make. Dispute any errors immediately with the credit bureau. Monitoring your credit reports empowers you to take control of your financial well-being. It's a simple step that can save you from future headaches. Section 8. Avoiding credit pitfalls, late payments and overuse. Managing credit wisely is crucial for maintaining financial health. Late payments are a major credit score killer. When you miss a payment, it signals to lenders that you might be a risky borrower. This can lead to higher interest rates and reduced credit limits. They can stay on your report for up to 7 years, affecting your ability to get loans, mortgages, or even a new credit card. It's a long-lasting impact that can be avoided with proper planning. Set reminders for payment due dates. Use your smartphone or a physical calendar to mark these dates clearly. This simple step can help you stay on top of your financial obligations. Automate your payments to ensure you never miss a deadline. Most banks and credit card companies offer this feature, which can be a lifesaver for busy individuals. It takes the guesswork out of remembering due dates. Overusing credit is another common mistake. It's easy to fall into the trap of thinking you have more money than you actually do. Avoid maxing out your credit cards. High balances can lead to high interest charges and make it difficult to pay off your debt. Charging more than you can afford leads to debt and damages your credit score. It's important to live within your means and only charge what you can pay off in full each month. Don't apply for too much credit at once. Each application you submit results in a hard inquiry on your credit report. Each hard inquiry can lower your score by a few points. Multiple inquiries in a short period can significantly impact your credit score, making it harder to get approved for new credit. Too many inquiries can lower your score. It's best to space out your credit applications and only apply when necessary. Remember, credit cards are not free money. They are a tool that, when used responsibly, can help you build a strong credit history. Use them responsibly and pay your balances in full and on time. This will help you avoid interest charges and keep your credit score healthy. By following these tips, you can avoid common credit pitfalls and maintain a strong financial future. Section 9. Building a solid financial future. Building and maintaining good credit is a journey. It's about making responsible choices today for a brighter financial future. Good credit gives you peace of mind. You'll have access to financial resources when you need them most. It empowers you to achieve your dreams. Whether it's buying a home, starting a business, or securing a loan with favorable terms, good credit makes it possible. Remember, your credit score is a reflection of your financial habits. Make smart choices and watch your credit score soar. A strong financial future awaits.